In a consecutive 5 months period, my portfolio lost more than 100,000 Singapore dollars. And in this video, I want to show you what exactly happened, the real actual numbers month by month. Because right now, you will see a lot of people sharing about their portfolio all-time high during the bull market. So I want to show you what happens when the market turns on the other side and how you would likely feel. A few weeks ago, when I published my $1 million by 35 video, I did receive some comments like this. This 1M portfolio must have come mainly from the YouTube income, correct? Finance influencer sure make very big money. Now I get it. Content creator, big money, easy to connect the dots. But here is the clear picture. It took two things for everything to connect together. Firstly, high income does not guarantee a good investment portfolio. I'm sure you know of high income friends around you. Do they even invest? And even if they are investing, do they have a good performance record? So income as an active engine is just one part of the equation. The more value you bring to this world, the more you get paid. Very simple concept. But after earning the income itself, what should you do? It needs to be consistently deployed and invested into the equities market. And compounding is the other half of the equation, the passive engine that is running in the background. So if you remove any of these two engines, the number will look very different. Like a high income, but you're not invested, or if you have highly invested, but you're still low income, you cannot add more. I think it doesn't work. So the income will give you the fuel, but consistent investing will then give the fuel somewhere to go. And this is exactly what today's video is about. Not on the income, but more on the investing side of things. The side that most people do not see because it doesn't make the headlines. But let's give a little bit of background context. I only started recording this from the year of 2023 because from year 2022 and before, when I started investing, I was more into cash flow investing for income. And this is exactly what most Singaporean investors, when they start investing, they get exposed to. Dividend stocks, as REITs, track your passive income, right? Because we are all into this narrative that once your passive income, like your dividends and your distributions, outpaces your monthly expenses, like let's say can cover your personal expenses of $2,000 per month and around $24,000 per year, you're good to go, right? You're financially free. And yes, that's exactly what financial freedom is about, because your passive income of dividends, 24K, covered your entire annual expense of 24K. Yes, that makes sense. So in social media, I'm sure you have seen creators sharing about their dividends payout to farm lots of engagement. And it's very easy to farm one because the dividend income is real and it's instant gratification. You invest in this month, by the next quarter, you'll receive some form of payout. But at one point in time, I started asking myself, is the assets under management, AUM, or my capital really growing? And I understand that the dividends felt good when it hits your bank account. Like you feel that there's extra income for this month and then you can go and splurge it. Now, honestly, capital gains won't give you this kind of energy, this kind of feeling, because it is compounding quietly in the background and not to your bank account. So at one point in time, from 2023, I shifted out of income investing into total returns and I started tracking my monthly capital gains and losses as a result. And yes, this was one of my fundamental rules in my 10 golden rules of investing video, rule number 8, where you look at total returns, not just dividend yield. Because I totally agree that dividends feel good, but total returns build wealth. So which one is really right for you? I hope that by the end of this video, it will answer your question. And hi, if you're new here, my name is Chris, an ex-chartered accountant. Now I'm a personal finance YouTuber. And you can also follow my Instagram of only 4,000 followers. So thank you to those who have followed. Now I'll show you some data behind this. In my data here, I've already calculated all the capital gains and losses, realized plus unrealized, month by month, ever since January 2023. Now, I've excluded values from capital injection. So these are pure market returns or losses. And this is across all platforms and all portfolios, whether in Interactive Brokers, Poems, and our Stashaway IG markets. Okay, so it's not just Interactive Brokers. And all the values here are denominated in SGD. So any kind of FX impact is already factored in. In year 2023, my first year of record on total returns, I had 6 up months and 6 down months. So like balance out 50-50. On a full year, the capital gains was $13,432, which is around $1,100 per month on average. So if you compare this number, 1,001, to my $2,000 of monthly dividends back then, it's like a loser, right? So it's like 2023 was a whole step backward, because that was when I just started only selling away my dividend stocks and moving into total returns, broad-based index funds. But don't worry, it was just year one of compounding. Let's move forward to the next year, 2024. So in 2024, I had 9 green months, 9 up months out of the 12 months, so only 3 months were lost, making in the full year, I made $118,283. That's almost $10,000 per month on average. 9 times my previous year. It was exactly the same strategy, nothing changed, just that the portfolio is bigger now. And that's because a large part of my portfolio has already moved out from the Singapore dividend stocks portfolio already. So with a bigger capital, bigger AUM, there's more to compound, and the market was a bullish year for 2024. So this will relate to my golden rule 5, which is just keep buying whether the market is at all-time high or all-time low. You just keep buying whether by dollar cost average or lump sum investing. Now we move on to 2025. What happened? And I'm sure many of you remember 2025 was the year Trump just gone crazy with all the tariffs with international market. If you look at my consecutive months of losses, in February, I lost $38,759. In March, I suffered $55,707, the worst month I ever had at that point. And even in April, I suffered negative $30,946. The sharp drop in early April could not be erased by that V-shaped reversal even after the Liberation Day relief. So in just 3 months, my total losses amounted to $125,412 gone on paper. Now let's be clear, these are unrealized losses and I acknowledge that, but I didn't sell away any positions in panic. In fact, I kept deploying with my income during this period. And back then, I still remember I was doing dollar cost average twice every month. So there comes the recovery. Starting from May, I made around $46,795. In June, $43,248. And in July, $57,311. Just 3 months after that negative 3 months, that recovery came back. But that only happened because I stayed in the market. I did not time my exit and entry back to the market, which goes back to rule 5. Just keep buying. Don't care what the market is trending. But that's not the end for 2025, because if you move down to quarter 4, from November onwards, I suffered 5 months of consecutive pain. November 2025, negative $21,268. December, negative $3,106. January in the following year, negative $1,830. February, negative $24,439. And on the last calendar day, the geopolitical tension was announced between US, Iran, and Israel. What a great timing, and led to one of my historical losses, March 2026, negative $61,053. New worst one ever, even worse than a Liberation Day crash. 5 months in total, negative $111,696 in losses. Now, Liberation Day crash lasted for 3 months for my portfolio, but this time round it was different, right? 5 consecutive months of capital losses, slowly bleeding for prolonged periods. Every other day, every other week, every other month, you open the app, it is still red color. Very demoralizing. But the plan was not changed. I still continued buying, and the main reason was because I followed rule number 6, which is do not leverage. Do not borrow money to invest. Once you're not in a leverage position, you will not be forced to sell away your investment positions. You will not get margin caught. You will not be stressed. And another golden rule that's very important, rule number 7, do not trade. Because when you have unrealized losses, some of you may be tempted to do some short-term trading or even options trading just to make back a little bit of your capital losses. You try to time the market, you try to exit and wait for a better re-entry when prices are lower. But don't do that, because April 2026 happened when Trump tackled again. My single best month ever, positive $168, $142. And then the following one, May, $114, $478. Just these 2 months alone in unrealized capital gains, just recovered and exceeded everything I made in all of 2023 and 2024 combined. And that sums up my first half of 2026 capital gains of $209,406, which is almost 2x of my 2024 and 2025's performance. Of course, no one knows where the market is heading, but this is exactly how compounding looks like. It is not a straight line. In some months, you will suffer crashes that you would never have imagined. And it was very painful to hold through the 3 months or the 5 months of consecutive losses. Very demoralizing. Now, if you compare year by year, 2023, it was $1,100 per month on capital gains. 2024 and 2025, around $10,000 per month. But just 2026 first half alone, it was $35,000 per month on average. It was exactly the same rules and the same strategy, just that the AUM, the capital, has gotten larger. and there was more principal or capital to compound. But one thing I have to be very clear about and I have to declare is that most of this is still unrealized in the market. Until I sell the entire portfolio, it is still unrealized. So everything is not guaranteed until I realize it. And that goes both ways, whether it is gains or loss. So remember my golden rule number 2, deploy everything into the market above the emergency fund. Do not try to time the market by holding dry powder. This is what I always mention. So even if you ask me now, what am I doing differently for second half of the year? Firstly, I will just acknowledge that I don't know where the market will trend. It can either trend up, very bullish, or trend down, very bearish. I do not know. And I do not assume that I will know. My investment strategy is still the same, globally diversified across US large caps, global ex-US markets, emerging markets, and even Singapore equities in a low-cost index fund and not by individual stocks. So it's very important to decide your action before the emotion and not during it in the market crash. So there are many golden rules that I've set. I already placed it in my Ko-fi cheat sheet, my 10 golden rules of investing. These are the things that keep me in place. So you can go and download it for free. And yes, this video is not sponsored, so I can keep things objective in my content. And usually I like to end off with golden rule number 10 because without this rule, the other 9 rules will not hold. And that rule is about temperament beats intelligence. It doesn't matter how smart you are, but if you do not have that temperament to hold, you will lose your emotions to the market. Just like when I was collecting $2,000 per month in dividends, I thought I had the temperament that this dividend can last me forever, right? The money comes in every quarter, whether my capital goes up or down. But honestly, this was just a loss aversion mindset. You see, people have this mindset, it's like paper loss only, right? When the portfolio value fall. And still can collect money from dividends is good enough. So dividend income kind of softens the blow. I understand it. But in honesty, you are just focusing on the cash and not on the paper losses. Total returns means you will feel it every month. There is no buffer. You will see the number go down in consecutive months like me. That is the real test. 5 consecutive months of losses amounting over $100,000. And that discomfort is the fee that you have to pay for the bigger numbers to appear on the other side when the market recovers. So the income engine got me started investing, the motivation, but the compounding engine makes that investing game worth it to play. So most importantly, rule number 10, do not overreact. Sometimes we react too much to the market and mess up our emotions and make stupid, irreversible decisions like this. Like I always say, it's the tahan ability, how long you can survive into the market, not try to time in and out. That's the most important. So if you just started investing and you are a dividend income investor, I totally get it. I was there before you. And I'm not saying you're wrong. It's just that in the life stage, I don't think dividend investing suits me right now, but it may suit you based on your life cycle. And yes, I do agree that a successful YouTube creator gets paid very well, but that's only if it succeeds. And even if you succeed, that's just one half of the picture. The other half of the picture, how are you going to use this money? Or are you just going to splurge it on high ticket items just to impress people around you who don't even care? And hopefully, if you agree with everything I said, you can help me support this video and channel by clicking on this interactive brokers link or scan the IBKR QR code here. It costs you nothing, but it pays a small commission to every click I receive. So thank you to those who have clicked. And if you're interested in my 10 golden rules video, and I walk through in detail what each of these rules mean to me, then feel free to check out this video right here.